So recently, Ken aka Chicken Genius did a video to explain why he's bearish on Tesla now. In his video, he mentioned that he has sold his Tesla holdings and gave a few reasons as to why Tesla could go down more, and he has a price target of $140. Now, some people want me to comment about him selling his stock, to which my answer is, sorry I'm not his wife so what he does with his money is none of my business. Instead, I want to go through the reasons which Ken gave as to why Tesla could go down and give my own opinions about it. Then I'm sure many people will be like, oh, you say Chicken Genius. Okay, the purpose of this video is not to point out who's right or who's wrong. I'm not interested in doing stuff like that Ken has been right so far, and for all we know, he might be right again. This video is just me doing due diligence for myself, and I'm just showing what I found. That's all. Also, full disclosure, I've invested a lot of money into Tesla, so you can consider me a Tesla bull. But I'm not married to the company. The moment I see any fundamental issue with the company, I will definitely sell. That's why I'm doing all this due diligence instead of just Tesla to the moon all day long. As usual, before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a cute donkey. Alright, let's start right now. Okay, here's the first point made by Ken.
This is one of the worst economic conditions ever. Do you really expect the first thing people will buy is a car? It's not just a car, a premium car.
I agree with him on a few things. We are now in one of the worst economic conditions ever, and Tesla is a premium car. So he's right that most people wouldn't think about buying a car now, especially Tesla, which is much more expensive than a normal car. You can see that total vehicle sales in the US has been going down. But here's the thing, recession doesn't affect everyone the same. For example, during recessions, Hispanic and blacks tend to have higher unemployment rates. Same for people who have lower education levels. Meanwhile, who buys Tesla cars? A study found that Tesla has been purchased by people who have higher household income and by people who can own a house. Basically, Tesla owners are mostly rich boys and rich girls. And this is confirmed to be true by Elon Musk himself. So if the recession comes, yes, we will see car sales go down. But people who can afford to buy a Tesla will still buy a Tesla. Fun fact pointed out by Michael Tan, Ferrari, a premium car company, actually grew during recessions. Next, Ken mentioned this.
Short term, the fundamentals have changed. Tesla's backlog is shrinking. Back orders are being exhausted.
Yes, it's true that Tesla backlog is shrinking. Later on, Troy Tesla also updated his calculation which showed that if we remove the 1-week delivery time, Giga Shanghai has zero backlog on most models. So has demand shrunk? Here's what I found. In May, Elon Musk mentioned that Tesla might stop taking orders for some vehicles because the delivery time has become way too high. Then in August, Tesla stopped taking orders for the Model 3 long range, and deliveries will only happen in 2023. So even though the backlog has gone down, it's not just because of the bad economy. It's also because Tesla themselves stopped taking orders for some cars. But what about China? Why did the backlog go down to zero? First, there are rumors that Tesla will reduce car prices in China. So if you wanted to buy a Tesla car, it's obviously better to wait for a while to see if this rumor is true or not. Second, the Shanghai factory has just increased the production capacity. And third, China-made sales had just hit another sales record. So if you have people delaying their purchase now, Tesla producing more cars now, and Tesla selling more cars now, it does seem like Tesla doesn't have a demand problem right now. Also, don't forget about the Tesla semi-truck which will start deliveries soon, and the Tesla Cybertruck which could launch in 2023, which will further increase demand. Quick pause, let me share a quick message from this video's sponsor, Weibo. This month, Weibo has further improved the sign-up bonus to $130 worth of free Tesla shares and a free Grab voucher worth $10. All you'll need to do is deposit at least 2,000 SGD into Weibo, make one buy trade on either US stocks or US ETFs, make another buy trade on US option, while maintaining a 2,000 SGD net account value for that 30 days, and you will receive or your rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Next, Ken said this.
What about new order flow? If you got connections up at Tesla, ask them. Tesla is losing market share. In such market condition, price matters. If someone is buying an electric SUV, this is a BYD Auto 3 with the Blade battery, at almost half the price of a standard Model Y. It makes people think twice.
He pointed out two things here. Tesla is losing market share and there are cheaper EV cars out there, which makes Tesla lose out. Okay, it's true that Tesla is losing market share in the battery electric vehicles segment, and it will only get worse. On Reddit, someone pointed out that 1 year ago, there were just 3 credible competing models being launched. This year, about 7 were launched. Last 3 months, 14 were launched. When you have more and more car models popping out, Tesla will definitely lose market share. But this doesn't matter. Why? Market share is not the most important part. The most important part is profitability. Imagine this, a Cai Fan store sells 1,000 plates of Cai Fan, and this super high-end restaurant sells 100 plates of golden burgers. So obviously, the Cai Fan store has a higher market share, right? But if the Cai Fan store just earns $1 per Cai Fan, while the high-end restaurant earns $400 per golden burger, the high-end restaurant ends up with higher profit. And that is the most important part, higher profit. Let me give you a real-life example. Samsung has a higher market share compared to Apple. But does that mean Samsung is a better company? Not really. If you look at the revenue share, Apple is earning the most money despite having a lower market share. That's why Apple is the top company, not Samsung. Same for the EV market. BYD is priced much cheaper than Tesla and has the most sales in August. But because Tesla is so efficient in production, Tesla is earning more money compared to BYD. Tesla profit margin is 13%, while BYD profit margin is just 3.3%. At least BYD is still profitable. Many other car companies barely break even or losing money for every EV they sell. Meanwhile, Tesla is still raising prices because their demand is so high. If one day demand slows down, Tesla can easily reduce the prices, which will bring back demand. In short, losing market share is not an issue. The more important thing is profitability. Next, Ken mentioned this.
Supply constraint, can't make enough cars to supply the market. But now they're hiring marketers and cold calling. Why? You think they got nothing better to do?
We have always been told that Tesla does not advertise or pay for endorsements, leaving them with more money to do research and development. But if you think about it, this is not true at all. Tesla's website is a form of advertisement. Obviously, they are paying someone to produce this video, right? What about Tesla's showroom, Tesla events, or sending Tesla car into space? All these are forms of advertisement and they cost money, right? So then, why does Tesla say they do not do advertisements? It's simple. They changed the definition of advertisement. In the 2018 report, they mentioned that they were spending between $70 million to $48 million per year on marketing, promotions, and advertising. Then, in the 2019 report, the cost is reduced to between $27 million to $37 million per year. Then, in the 2020 report, they suddenly say that all these costs are immaterial, which brings me back to the point of Tesla hiring marketers and cold calling. This is nothing new. If the marketers can bring in more sales, great! Tesla will earn more money. Otherwise, this cost is immaterial for Tesla. Next, Ken mentioned about the layoffs.
The layoffs really pisses me off. I really feel bad for the employees. They work so hard.
First of all, I understand how Ken feels. Of course, Tesla laying off good employees will suck. This is especially so if it's your friend who is being laid off. How do I know it sucks? Trust me, I've been laid off before. But this is not as bad as it seems. Because 1, people who can enter Tesla are all talented people. LinkedIn found that all of them quickly found new jobs after being laid off. Tesla is just laying off people who they feel are not needed now, and at the same time hiring people that they need. So suckiness aside, Tesla laying off employees is a good thing for the company.
Giga Berlin, good luck. Think about it this way, the cost of energy directly affects the cost of manufacturing. You literally become uncompetitive.
Yes, while the cost of energy directly affects the cost of manufacturing, I feel that it will equally affect all car companies, not just Tesla. So Tesla won't become uncompetitive. But what about the rising cost of energy in Europe? Energy prices in Germany are expected to rise by 60% next year. On Twitter, Michael Tan pointed out that the energy used to weld a car is 80 kilowatt per hour, a number which he got from this study. Right now, energy price in Germany is 162 euro per megawatt hour, or 0.16 euro per kilowatt hour. So even if you use a super high $1 per kilowatt hour, the cost of welding will just go up to $80 per car, which of course will affect profit margin, but it won't be as bad as it seems. Worst case, Tesla can just make more cars in China, which doesn't have a backlog by the way, and ship it to Europe with the existing logistics provider.
Again, I love the company, but not the stock price. The target is still the same at 420 pre-split, which means about 140 levels.
Tesla has already gone down 40% year to date. All the aunties and uncles out there who don't invest their money are outperforming you now. Wholesale. Could Tesla go down to $140? Absolutely, this is Tesla we are talking about. There's a whole bunch of fanboys on one side and a whole bunch of haters on the other side. Just check out my latest video on Tesla. Everyone here is a Tesla expert. That's why if there's anything wrong with Tesla, you can be sure that all the haters will be like, shut lah! And will short Tesla 18 levels into the ground. So $140? Totally possible. But here's the thing. Right now, Tesla's forward PE ratio is at 38. Which means that if Tesla drops to $140, its forward PE ratio goes down to 24. When you have a company that can grow as fast as Tesla, but have the same PE ratio as Starbucks or Johnson & Johnson, that's when you be like, bye! Here's the thing, I don't know if Tesla will drop to $140 or not. Maybe Ken knows. He's good at reading the charts, but definitely not me. I'm noob at reading them. All I know is I don't need to buy at the cheapest point. I just need to buy when it's cheap. Because over the long term, when all this nonsense is over, Tesla stock will eventually reflect the real price. Anyway, that's all for this video. Do let me know if you spot any problems in my findings. I would love to hear that. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.